So, when you think of the name Holcim, you probably think cement, right? I mean, fair enough. But this isn't just a cement company. We're talking about 112-year-old industrial giant. And right now, it's in the middle of one of the most ambitious corporate makeovers you're going to find anywhere on the market. So yeah, let's dive right in. And really, this is the core question for anyone looking to invest in Holcim today. I mean, how do you even begin to reinvent a company this old, this massive, for the future? We're not talking about a few small tweaks here. Holcim is fundamentally re-engineering its entire identity. And they're making a huge bet that this whole transformation is going to unlock some serious value for shareholders. Okay, so let's get into the blueprint for this massive makeover. It's all about a strategic shift, a move away from its old school roots and into a future that looks, well, completely different and potentially a lot more profitable. This slide pretty much lays out the whole story. On one side, you've got the old Holcim. Think classic industrial company, right? It was all about volume, 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 selling tons of cement. But that also meant it was totally tied to the crazy boom and bust cycles of the construction world. Now, on the other side, that's the vision for the new Holcim. It's way more focused on high-value solutions, driven by actual profit, not just selling more stuff, and designed to be way more resilient when the economy gets rocky. Okay, now what's really fascinating here is the story this tells about where the company is right now. Check out that 26.4% margin for cement. That is the cash engine, right there. It's a hugely profitable business that's basically funding everything else. But the real story, the one you need to watch for the future, is that solutions and product segment. Their profit jumped over 17%. That is the growth engine. So to really hit the gas on this whole transformation, management is making a huge, huge move. We're talking about the great separation. And look, for any investor watching this company, this is the single most important thing you need to understand. And they're doing it with something called a spin-off. It sounds complicated, but it's pretty straightforward. They're basically taking a massive piece of their business, carving it out, and turning it into its own brand new company that will trade on the stock market. And the best part for current investors, they get shares of this new company handed directly to them. So you might be asking, why go through all this trouble? Well, the logic is pretty clear, and it breaks down into 3 key steps. First, they're creating this new company called Armorize. It's going to be a pure play focused like a laser on the super strong North American market. Second, by doing that, the original company, the new Holcim, can sharpen its own focus on Europe and its big sustainability goals. And third, and this is the big prize for investors, the theory is that it unlocks a higher valuation for both companies. The market can value 2 simple focused businesses more easily and hopefully more richly than one complex giant. All right, so once this separation happens, what's left? What does the remaining new Holcim actually look like? Well, the company has laid out a really clear blueprint for its future. Honestly, this chart right here says it all. The big goal by 2030 is a total rebalancing of the business. Management is aiming for a perfect 50-50 split. Half the business will be traditional building materials, cement, and the other half, that high-growth, higher-margin building solutions business. This isn't just a minor shift. It's a fundamental change to how this company makes money. So, how are they going to get there? Well, here's the game plan. They're targeting steady sales growth, sure, but the key is where that growth comes from. It's not about just selling more basic cement. Instead, the real focus is on scaling up their branded, sustainable products. They're going to push hard into new markets like roofing and insulation, and they want to become the leader in circular construction, basically recycling old building materials. Okay, so that's the plan. Now let's put on our investor hats. What's the argument that this whole massive undertaking is actually a brilliant move? Let's dive into the bull case. The foundation of any good bull case starts right here with the numbers. A 19.1% operating margin. I mean, that's not just good. It's a record high for Holcim, and it leads the entire industry. It tells you that even before all these big changes, this company has incredible operational strength and real pricing power. And you know what that kind of profitability creates? A mountain of cash. We're talking 3.8 billion Swiss francs in free cash flow just last year. This is the fuel that powers the entire strategy. It's what pays for acquisitions, it funds R&D, and most importantly for shareholders, it allows for direct returns. And speaking of returns, check this out.
management is signaling some serious confidence. They're proposing an 11% dividend increase. Now, that's a powerful statement. It's management telling investors, hey, we believe our ability to generate cash isn't just strong today, it's sustainable for the future.
And this quote really just cuts right to the heart of the whole bull case. The entire strategy, from the spinoff to the pivot to solutions, it's all a deliberate effort to engineer what's called a re-rating of the stock. In simple terms, they want the market to stop valuing Holcim like a boring, low-multiple cement producer and start valuing it like a high-growth, high-multiple specialty solutions provider.
But of course, no investment thesis is complete without looking at the potential downsides. There are some major risks to this grand plan. So let's flip the coin and look at the bear case.
First up, the big one, the external risk. Let's be real, despite this whole pivot, Holcim is still deeply tied to the construction industry. So if there's a global downturn or if interest rates spike, demand for their products could get hit hard, and it won't matter how well they execute their strategy. Second, there's the internal execution risk. Pulling off a corporate separation of this size is just incredibly complex. There are a million things that could go wrong. And if it's not managed perfectly, you could end up with operational headaches, and worse, you might not unlock any of that promised value at all. Third, you've got regulation. You can't get around the fact that making cement is a very carbon-intensive business. And in Holcim's key markets, especially in Europe, carbon taxes and stricter emissions rules are on the rise. That's a direct and growing cost that could really start to eat into those impressive profit margins we just talked about.
And finally, there's a more fundamental strategic question. It's kind of like asking, can an elephant learn to dance? Does this old-school industrial giant really have the right corporate DNA to succeed in a totally different kind of business? I mean, mastering things like brand marketing and specialized distribution, that's a whole different ballgame than just selling bulk cement.
So we end up right back where we started, with the central question for any potential investor. Holcim is trying to engineer a bold new foundation for itself. The bull case says this will build a much higher valuation. The bear case worries that the risks are just a bridge too far. You've seen the blueprint, you've heard both sides, now you get to decide.